Okay, so in this lesson, we're going to be looking at the circular flow model, in specific, how the different markets communicate or um, um, are interchanged, right? So in that, we have two main markets, which is our factor market. Sorry for that. Which is our factor market, forget my spelling, factor market, and our product market, right? We know that these two are connected to each other, being that they are interdependent. So our factor market deals with all of our factors of production, and the product market deals with the final output, right? So you can literally think of this as input, right, which is mainly the labor, and then the output being the products, right? Now, how are these two connected, right? We have households. Households is me and you, people who work in companies, right? And they provide factors of production. Just gonna write FOP, factors of production to the factor market, right? Factors of production being mainly that they provide labor, they provide hands, right? Then on the other spectrum, we have our firms. Our firms, or you can call them businesses, our firms provide income or salaries, right? They pay income to the factor market, and in exchange they receive labor. So it's like this, right? Labor goes into the factor market. That's when we leave the house. Say Bongani leaves the house and he goes to work. I'm providing labor to the factor market, right? And that labor then comes to the firms. So let's say I go work for ShopRite. I leave the house and I go work for ShopRite. In return for this, I want income. I'm going to get paid by the firm an income for my factors of production, for my labor, right? On the other hand, we have a connection of products in the product market, right? Being that these are goods and services that are used and bought. So me as the household, yes, I went to ShopRite and I worked there. Then in return, I will go to the product market and buy goods and services, right? I will buy goods and services. Then firms will go to the product market to sell their goods and services. In return, what would they get? They would then get their income, right? So this, I shouldn't write income. I think that's going to be confusing. Salary, you pay salaries, right? And then in the product market, firms sell their goods and services for income. So I, as the laborer, as the factor of production, when I go to the product market, I am going there to buy goods and services, and I spend my money, right? I'm spending money in the product market that firms would receive as income. In return for that income, the firm would then provide me with goods and services, right? So just a simple example of this. This is Bongani. I go to work at the factor market. So it factor market, which is the firm. I go work at the firm, and the firm pays me money, right? This all happens in the factor market. Then I then go to the product market and I buy goods and services. I would then let's do it the other way. The firm then goes to the product market, with the fact with the goods and services that I created to sell there, right? Remember, Bongani started by going to the factor market to sell my labor, right? Say I was creating something. Say I went there and I work for a big company and we create cars. We manufacture cars. So I went to the factor market and I manufactured a car. I manufactured a Toyota, right? Then the firm, after that car was made, after that little car was made, the firm pays me my money, then takes that car to the product market, and that is for me to then buy. So then I would then take my money to the product market to buy. Do you see how all of this is connected? Hence the whole interdependency about it, that if now Bongani can't work, if I can't work, then there's no money. If there's no money, I can't then spend the money at the product market. And then the business also loses money. So now everything is a bit more connected, right? Having understood this, we can now go to a bit more complex one and introduce government, right? So before we go on, just remember that start here. Households provide labor to the factor market, right? In return for that labor, we get a salary, we get income. Then the firms provide goods and services. The goods and services, I should have written them that side. They provide goods and services to the product market. And for them providing these goods and services, whether it's cars, fruits, veggies, a bicycle, whatever the case is, for them providing these goods and services, we as households spend our money that we earned from working, right? So if you look at it, the money stays in the circular flow model. The money stays in here. It continues and continues rotating, right? So now we're going to introduce one more factor in this, which is the government. And the government is there to stabilize and to help the economy grow, right? And that is this. Looks a bit different, looks very daunting, but let's take it apart one by one, right? We said that households provide to the factor market. That doesn't change. Market, right? That doesn't change. And for that, they will receive a salary. Salary goes that way, right? Then we have at the bottom, businesses will provide goods and services to the product market. I hope I can spell market this time. Product market, right? And households will buy them. In return, we will spend our money, hard-earned money, to pay the business, and the business makes money. Then the business then goes back with this money that they've earned from the money that we've spent. The business, no, sorry. Yeah, this thing is the other way around. This is the product market, purchase of goods and services, right? And then this is the factor market, which is our labor. That's an A, right? Which is our labor, right? So as I was saying, we as the business are going to go to the factor market and work for the business in order to get wages, right? Or you invest in their business, get dividends, interest, profits, all that, rent, right? And the business will then have a product to sell. They will then use this product to sell back to the household, then receive a payment for that income. You get me? Then with that income, the business will then hire more people to produce more goods and services to sell to us again, right? And then we would buy. So that means the business becomes bigger and bigger, hires more people, right? If the business hires more people, that means there's more people who receive income. And if more people receive income, there's more people. I mean, if the business hires more people, there are more people who are working. More people receive income. More people are able to spend that money on the product market. And then the circle continues, right? The whole thing, it's a circle, is that it continues. It's not a squellular. There's no such word, but squellular flow model. It's a circular flow model, meaning that the money is rotates around this model. But then what happens if there's not enough people who work in the businesses, right? Let's use South Africa. There's not enough employment. There's not enough people who are working. Not enough people with education, grade 12, which the business requires to hire people. What then? Then we'll introduce the government. Like I said before, the government is there to stabilize the economy, to stabilize the circular flow model, and also help in that, right? So look at what the government does. Let's start with the household, our relationship with government, right? For those who are working, government will collect taxes, right? If you do accounting, you have pay as you earn. You pay taxes, right? When you buy food, you pay VAT. This all goes to the government, right? Then, for those who are not able to get paid, for those who are not able to work, the government provides social transfers, right? These we can call government subsidies, right? I hope I'm using this term, subsidies. Seems like the spelling is right. I hope I'm using it properly, right? Government provides subsidies, so you can think of this as the 350 grant, the COVID-19 grant when people were unemployed and there was money going out. You can think of this as the social grant for old people who are not able to work and all that, people who go to pension and all that. You can think of it as I think I'm using this one properly. When I think it is also social grant. When a child grows up without parents, the government provides for that child. So they give a certain spending. When a woman is pregnant and is not able to work, there's also a grant that they give. And so you see now the government uses all this money to give households. And this money that is given to a household then goes to the factors market, right? All these grants that I named is going to people, and we need to live. So in order to live, you need food, you need water, you need electricity, you need all these different things that we find in the product market, right? On the other side, with businesses, what is the relationship between government and businesses, right? Government charges businesses tax. Once again, if you do accounting, you have your income statement, right? And then at the bottom of your income statement, after all those line items, you have income tax. After that, you have your net profit, right? For those who don't do accounting, I'm sorry, but yeah, right? You have your income tax, and this income tax is the one that is paid to government, right? This can go into 100,000s and 200,000 and so forth, but this is to ensure that the government has enough money to give social transfers, but also government purchases, right? Government is also a consumer in the circular flow model, meaning that think of tenders, right? Government spends releases tenders in order for businesses to make money, and when a business makes money, they will hire more people in the factor market. Hiring more people in the factor market decreases the amount of unemployed people, and the decrease of unemployed people means more people are employed and they have an income, meaning that they can buy in the product market, and that gives money to the business, and the business grows, hires more people, and so on and so forth. So do you see how one thing in one increase in the whole circular flow model affects the whole the every single part of the markets, right? It affects the households, it affects the businesses, and so on and so forth. Interchangeably, if businesses do not have money, they will pay less taxes, and the government would have less taxes to issue tenders. But government prints money and all that, but they would have less tax money to pay to issue out tenders and all that. They would have less money for social transfers. And then, this is not in your textbook, but if we're looking at South Africa where it is, when businesses don't have enough money to pay taxes, and when households don't have enough money to pay taxes, this is where the government goes outside. Again, this is not part of a textbook, I'm just fun fact. Government goes outside and makes a loan to other other countries and to the World Bank and everyone to help us to inject more money into our into our country, right? And when that money comes in, it then goes to tenders and all that, and social transfers, and then it builds up our economy once again, right? So that's how our circular flow model works. Please understand that there is a thing called derived demand, meaning that demand for labor depends on demand for goods and services, right? It comes from here, derived demand. If more people want products in the product market, then the businesses would receive more money. Once that happens, they hire more people, which more people have disposable income, and they will spend more, and so on and so forth. So it's a growing thing, right? Just a quick example. Once again, back to Bongani, who works, right? Bongani is unemployed. If he's unemployed, he will receive money from the government, right? Government will give him money, and with this money, he will then buy essential foods, let's say food, right? And he will buy this food from ShopRite, right? Then, if there's enough Bonganis in the economy, ShopRite will grow. Once ShopRite grows, it'll hire people like Bongani, right? What is it? This factor, right? Labor factor market, right? It'll hire people like Bongani, and then Bongani is no longer unemployed. He's now employed and receives a salary. Now, Bongani can go back to the factor, the product market, and buy something different now. I have money, so I can buy a cell phone. And now it's no longer ShopRite that I'm creating value for, creating money for, but instead it's Samsung. Samsung now has money, and Samsung now goes to the labor market and employs someone else like Bongani. And that person receives money, he's also no longer unemployed. So you see how this thing continues to grow and it's connected to each other, right? Once once Bongani is employed, government no longer gives money to Bongani. It gives money to John and Pete and Tabo and whoever, and then the government the country grows, the economy grows. And remember, that's the whole study of economics. We're trying to understand how is the economy working interchangeably, how is it connected to each other and everything.